Verizon earnings, like I said, not much flow recently. Just a put for $42 by October. One call for same as well. Call for 45. They report Monday, but keep an eye out for any stack sprints that might show up. So just the last two. Again, we haven't seen anything leading up to it. These are all the buys that I'm showing you guys here. These are all still active, as you may understand. So you can kind of peek over at the spot price that's over on the right. Take a look as to see, as of right now, at least on the 17th, spot price was trading at about 41, right under $41. See if it's gone up or down from there. See if these people might be profitable at that point. But Verizon, let's see what Max has to say on his channel. He just posted this too. Earnings preview. I'm going to let you go ahead and read off what you have to say.
Yeah, so basically, let me go ahead and pull that article up. So EPS, they're expecting $1.18. That's a 2.6% year over year gain. Revenue, we're looking at 33.58 billion, which has given us a 2.4% year over year gain as well. In terms of EPS, we're looking at 0.18%, which is hinting at a potential beat here. So that is one thing to always look at as well, is their earnings, or ESP in this case. Usually if that's positive, that means the street is expecting a beat. Now, however, with 0.18%, that's like expecting a pretty small beat. So it might not be a thing where it swings 10 to 15% in a direction. It might just chop the living hell out of both sides of those contracts, which, to be honest, Verizon is one of those companies where unless they are announcing a partnership or anything like that, it moves kind of funky. It's never going to be consistent or true to that, but key themes that we have driving the quarter for them: broadband, which is their bright spot. They added 339,000 net broadband subscribers last quarter, which I got suckered into that. I had Verizon phone service and they're like, "Hey, you want internet for 30 bucks a month?" And I was like, "Sure." Mine's crazy expensive, so love a good deal. We have fixed wireless catching fire in underserved markets. So fixed wireless just means like you pay 35 bucks a month, you get a set amount of data, a set amount of like other benefits, and it's not like fluctuating based on the data you do use. However, wireless is losing steam. In Q1, Verizon lost 289,000 mobile subscribers due to no aggressive promos and T-Mobile and AT&T poaching customers. Also, the U.S., one thing to keep in mind, U.S. mobile market is currently saturated. So a lot of these companies are going to be playing defense. Pricing power is going to be into focus as well. Verizon hiked prices on several plans earlier this year. That's helping revenue inch up, but will it offset subscriber losses and our consumers bulking at higher bills now and considering making a move? And then quietly profitable. Despite the low growth narrative, they're a cash cow. 29 billion in operating profit, 18 billion in net income, and they have a market cap currently of 173 billion as well. However, the big appeal of Verizon, and this is maybe something you guys should check into, is they have a great dividend payout. So that is a big reason why people are in there. So that's one thing to keep aware of as well. But yeah, those are kind of the big things. It's not going to be a flashy one, but it's a quiet, like consistent cash machine for people. So you'll see whales randomly jump into it and the price just go parabolic. And because I like this earnings because the expectations are so low. If they do well or they do poorly, you can catch a pretty nice gain in either direction, if we're being honest.
Yeah, very, very good. If you guys are taking a look over here on my trading view, just for you guys that are in the Discord, if you want to understand, these blue lines that I'm putting onto my chart are basically the big resistance and support areas that you can expect price to move to, depending on what direction it does go. In terms of charts and in terms of things leading up to earnings, the fact that it's dropped like this before earnings kind of gives me a feeling that we might see it to the upside. Especially because we do, overall, when you take a look at Verizon and look at the earnings on the bottom, they tend to be more so beats than misses. Every now and then you'll see a miss here and there. But I also want you to understand too, just because it's an earnings beat does not necessarily mean price is going to go up. A lot of stuff is priced in. So the thing that you want to keep in mind as we do these earnings reports, as we do these reviews before the report comes out, everything Max said has technically already been somewhat priced in. You have to keep that in mind. Now, what we have to understand is stacks will give us a little bit of insight as to what big money may be expecting and also whether or not they've been purchasing. So if I go into our stacks really quickly, just under Verizon, like I said, on the left side, buys and sells. There's nothing extremely recent. We have a sell for calls and a buy of puts and another sell of calls. So it's a little bit more bearish in the last couple days before we closed off for the weekend. And on the right side with equities, you'll see they haven't necessarily been loading the boat that much. They've been purchasing here and there, millions and millions of dollars, but that's just what happens with the institutions and the whales there. Now, if we are expecting a beat, right? If we are expecting a beat, the fact that prices dropped here means that there is more of a possibility we might see an upward trend after earnings comes out because they've already sold off. They're trying to load up the boat possibly, just like the other way as well. If it was shooting up quite quickly, we see new all-time highs, etc. Yes, playing the lead up to earnings would probably be a safer bet, but at the end of the day, the risk would be to the downside if we see a huge run up right before earnings. Couple things I really love about this one though, the PE ratio. I've always talked about this if you guys go through our previous live streams as well. The PE ratio is under 10 right now, which is a very, very good value in terms of something as big as Verizon. So that's something to keep in mind. And another thing as well is the institutions understand that that's a good value play. If they're continuing to make money, which they do, they have great dividend. Their net margins, 14% last quarter, 14% the quarter before, so they're pretty steady. Ultimately, I would say stacks doesn't give us a huge amount of up or down in terms of bearish or bullish, but I would say if I were to play Verizon here, I would probably play to the upside. However, there is always the possibility it's going to have a slight beat and price might just chop around in this area that we see right now. But it does need to break up above that 4170 range for it to have a more clear skies for the upward trend there. Also, too, you can also understand here, we're looking at the big picture of it. These are all-time highs for Verizon. So do we see it head further up? There's a very good possibility that in due time we will. So in terms of an equity play, might want to aim for, getting in with those low PE ratios so you can play it to the upside there.